How's it going out there? It's January 11th. I'm Frank Curzio, the Wall Street Unplugged podcast, so I break the headlines and... tell you what's really moving these markets. I say just back from the CES. Broke it down yesterday. But today, back with my buddy Daniel Creech, discuss the markets. Daniel, how's it going, man? It's been a while since I saw you.
Happy Wednesday, Frank. I know. It's good to see you. I'm sorry that you got sick in Vegas. Now he's in here trying to pawn it off on me so he can feel better. I understand that.
I'm trying to get you sick now. This way you can get sick. So you can feel, right? That's how people should feel when they get sick. I want you to feel just like me.
Yeah.
I feel like shit.
I want you to be miserable. No, I'm sorry to hear that it was a lackluster overall, but it had to be good in Vegas. Gosh, do I miss Vegas.
You know what?
I was talking about that when I was filling in. By the way, I had a great time filling in for you here on the island. That was a blast.
No, that was awesome, man. I really appreciate it. But you know what? One thing about Vegas, I've been there so much, it's kind of like, it's not really exciting to me. If I had a choice, I wouldn't go because I've gone there so many times. The expensive is that's not even the right word to use. I mean, I'm not justifying how much everything costs there. Holy cow. I mean, I feel like $100 like a penny there. They just take everything. I'm not talking about gambling, anything. The fees and everything, especially on the strip, right? For tourist places and stuff like that, man, it's insane. Even the bars, they charge 20% on top of everything. It's getting out of hand now. But overall, I just expect it to be more fun, more things to do for the consumer and stuff, and it wasn't. There were a few things that were really cool. For the average person going, they would have been disappointed compared to if you went pre-COVID, because there's always so many fun things, and you'd come back and tell 20 stories, and now you might have told 2 or 3.
Yeah.
Even the cars, there wasn't a lot of cars there compared to last time. GM4 wasn't there. With these huge displays, especially Ford, I was surprised at, because you had the best lineup of EVs in 2023 ever. Then why the hell aren't you on that show? That's your consumer show. That's the consumer, right? That's what you want. That's where you get free publicity. You make your money back. Spend $1 million, but you get 10s, 20, 50 million hits of people blasting everything all over social media. That's why it's worth it for that conference. And I guess people just cutting back so much, you actually saw that. I mean, there was a lot of people there, but, overall it was cool and it was fun. It was all right. But
now, I was following your Twitter, of course, not because I have to, but I was, I didn't see any headsets or anything. So you said you have a headset, because when you got back, I was telling you, because the metaverse made its first presence there. So I was looking forward to hearing about that. And a guy was telling me that he had tried, I believe it's the latest headset from Meta, formerly Facebook. And he was telling me how awesome it is. I know you said you met one, you looked at a product that was a killer, you didn't know, but you said they are a lot better. You said they're actually realistic.
Yeah, they're realistic. Holy cow. I mean, it's really good. If you have the Quest, it's really good.
Yeah.
Hey, my kids use it all the time.
He was playing poker, and he said it was just like going into a casino and playing poker.
It is unbelievable technology. That's cool. And it's going to get better. And now, HTC's releasing their Vive, and that's unbelievable as well. But now you've seen all application. Now you've seen something that's really cool that people can wear. And now they're trying to make it into glasses like you and I wear every single day. We're very far away from that. I mean, there was like 30 different displays. There was some that didn't work. Seriously, they didn't even work. I explained that yesterday. And all of them look like you were wearing, just big, bulky glasses. They look weird, like you knew something was on. And that's, you're going to wear a headset instead of that. So it's going to get to the point where, your phone is replaced by your glasses, and you're going to be it's going to get there. You see it. I've seen technology. It's amazing. We're still far away from it. Probably 3 to 5 years. But you're going to see it. It's going to get better and better and better and better, and that's the goal. But
let me ask you a question. Do you think Bitcoin was rallying in price because the metaverse and Bitcoin was being talked about at the CES?
No, it was being talked about. There was a crypto presence there. What was great is the tokenization. It was finally a tokenization. There was a whole big booth in the middle of the Venetian Expo, one of the main floors, and they're talking about, the tokenization of assets. And I was just looking, and I'm walking by being like, yay, we're like the first person to freaking do that. It was really cool. And they had like 10, 15 companies in that booth alone. And it wasn't like a booth. It was just like a sound stage. And people would get up on stage and talk. And then you had like just different companies of stages that are doing tokenization and stuff like that. And it was really cool to see. Right. That's what NFTs are about. It's ownership of the blockchain, right? Instead of getting patents and stuff like that, now you're showing ownership of your property. NFTs could give you special access. It could be a barcode on your phone. This is the future. You're looking at you're saying Bitcoin, and I get this question a lot, Dan. We'll start here because we're definitely going to talk about CPI tomorrow. But when I look at, the question I was asking, how's Bitcoin, Ethereum, they're kind of rallying and doing good. How's it holding up so well where, we just saw FTX, Celsius, Voyager, right? But what about Silvergate coming down a ton? What about Coinbase now, right? Everyone coming after Coinbase kind of. saying there's going to be a major slowdown, which you're seeing. So you got to upgrade from Coinbase the other day, a downgrade today. But how is it keeping up? It's because that people are the holders of Bitcoin are long-term holders. It's just a matter of where you're keeping your assets. And when I argue about Silvergate and Silvergate's coming down, I said I don't see any fraud there, and I still don't see fraud there. However, it is a bank, and people are removing deposits. And when you're removing deposits, and you can do that for Bank of America, if you feel like something's wrong with the bank, you're going to remove your deposits. Now, you're not seeing people sell Bitcoin. What they're doing is they're transferring that into cold storage, which is offline, and this way they can hold it someplace else because a lot of people got burned, especially with two companies, Celsius and FTX. Those are companies that were supposed to be reputable, that everybody thought were okay, right? That really surprised the hell out of everybody. And they got wrecked. And Silvergate, what I was saying, listen, I think there's no fraud there, but people are going to continue to pile on. If you can get a way to scare the shit out of everyone where you remove your assets for a banking account or something like that, that's what happened. And now you had Silvergate come out and say that they had to sell some of their assets, which their assets were in treasuries and other things. They had to sell some of their debt for a loss to cover around $8 billion because a lot of people were removing it because there's stories everywhere. And that's another story saying some kind of home loan that they had from like 3 years ago, 2 years ago. Again, they're going to keep piling on. This is Wall Street. I use this example when it came to Wall Street. Wall Street is I work there, guys. This is what I do for a living. It's the most cutthroat thing in the world. Okay, your best friend sitting next to you at Wall Street wants to take you and everything away and wants to steal your wife from you. Okay, they want to steal your house, take everything from you. And I use this example, this analogy a lot. Okay, on Wall Street, and it's true because not only will they take it, you'll be there, leave just in the street bleeding with one sock on. They'll take the sock and burn it in front of you and say that's what you get. That's Wall Street. There's nothing more cutthroat than that. So once they find a little angle they can come, they're trying to do Coinbase. They're trying to go after Tether now. They're trying to destroy the industry, which means when it comes to crypto, it's still, you got to wait for this to settle out. The companies that are going to be left standing, which is going to be Coinbase, they have a ton of cash on their balance sheet, over $5 billion. A lot of it's institution. You're seeing, you're going to see trading volume come down, but they also have a lot of employees, which they're cutting now, which is good. So, Coinbase, I think, is survivor. Silvergate, listen, it's about assets. They had the assets. A lot of other companies that sort of runs in the banks didn't have it. Silvergate was able to sell $8 billion, and maybe people keep removing money from Silvergate, and maybe that's the way it goes under. I don't see fraud. I haven't seen fraud, and it would be easy to prove because they're regulated. They're a publicly traded U.S. company, U.S. bank. They're regulated, right? Just like a J.P. Morgan. So you could see all their financials. I'm sure since FTX, everyone's been ripping off the books and everything. So, when it comes to this, and now you're seeing, what else we're seeing? We're seeing the Winklevoss twins, right, with Gemini and Gemini Earn, where all these companies that were giving you 8%, 10%, 15%, while interest rates is zero, there's a reason why that never happens. The reason why in my newsletter, I never suggested doing that, staking and stuff like that and earning interest because I didn't understand it. I had a BlockFi CEO, Zach Prince, come on, and I talked to him and said, I asked him questions about it. He wasn't able to tell me where I understood how are you paying that in. You have to be making it someplace else. Obviously, they weren't. Okay, so now you have the Winklevoss twins, right, accusing Silver, who's, that's DCG, right? So Digital Group. And
Digital Currency Group, yeah.
Digital Currency, and they're going back and forth, right? And they're saying that, where the trading for Gemini was on, how to go through them, and these are the guys that own the Grayscale Bitcoin Trust, and how they were involved in 3AC and that blow up and lending money to them back and forth. So, it's all he said, she said type thing, and they're going back and forth. And again, it's not good for crypto. But the reason why you're seeing Bitcoin and Ethereum, the two main ones, not really getting hit, even though you're seeing more and more controversy and more bullshit and more drama and prima donna bullshit in the industry, is because people who own those assets are not selling them. They're just taking them out of these places and holding them in cold storage because they're believers long term. So those are two that work. There might be a couple others that work, but the rest of the industry, you have to sit back, wait a little while, and there's going to be the opportunity of a lifetime in here because it's not going away. As much as Jim Cramer says it's going away now. I think what did you say you like Coinbase at? I forgot.
Well, I was looking back. I forget the number, but I feel like I remember him touting Coinbase as an entry into crypto and all that. And of course, and people can change their mind. That's fine.
Yeah.
Gemini, today on Decrypt, I was reading this morning that they are terminating their Earn program.
They have to.
Well, you think, and trying to get that $900 million, that there's this $900 million figure that they keep tossing back and forth between them and what Genesis owes. It's a mess. You're right. That is all good because, to your point, you asked the gentleman the same question. He didn't really understand it because there is no clear answer. It's clear as mud, as the fun saying goes. Sam Bankman-Fried was asked the same thing about how, these earn programs work. He gave a terrible answer months and months ago. This is definitely a black eye. Outside of a few smaller altcoins or whatever they're called, outside of Bitcoin and Ethereum that you don't even have to be interested in crypto, you know what those are, or you have at least heard those. I am surprised that volume is hanging out or staying. I'm surprised there's still as many altcoins as there are. Let's put it that way. Because if you're the average guy, I don't know, unless you really want to hang up on crypto completely, which I don't think that's the average crypto investor or risk taker. What's keeping you from going, hell with it, I'll just buy Bitcoin, Ethereum, and forget about this?
I mean, that's really what
greed,
you see.
And I don't mean greed is a bad word. I mean, greed is a good word. Other than greed, what are you taking shots for? That's an interesting back and forth to think about in a macro view.
Looking at this industry 4 years ago and really having great context in the industry and going through these tokens and everybody telling me, this is great, this is great, this is great. I told you from day one. And it was even more relevant now than it is back then. 90 to 92% of all the companies are bullshit. Okay? These are not companies that equity stake. When you go bankrupt, they can't make their payrolls. There's no equity involved. There's no equity. You don't see the numbers. This is a utility feature. The utility is the token has to be linked to the utility, which is actually powering the technology within the blockchain. And some of them don't have a utility. Uniswap doesn't have a utility yet. Billions of dollars valuation. Most of them don't have a utility. Binance has a utility. If you could use that token and then they burn it, which is like buying it back every single quarter. They're buying it back. Or burning their tokens, and you could use it for trading fees. You could use it to buy different things. They have 100 different things you could use a token for. But if you look at all the other tokens, I'm like, where are you using? Well, when we make profits. Well, you're not making profits for 20 years, right? Yeah. 10 years. So basically, you have no utility, right? And there's no equity tied to it. So you're saying, why aren't they going out? Because they just leaving it there, and maybe they traded a penny or they traded 0.0000001 cent. But it just shows you how these things are really securities. They're all securities, right? You have to deem them all securities eventually. Other than Bitcoin, Ethereum, and maybe 2 or 3 others, they're all securities. People intend to make money on them. They're selling them. People own these things. The insiders own them. You don't know how much it is. They're dumping the crap out of it while they get being pumped online and Twitter and things like that. And that's been going on for a long time. What I'm surprised to see is that even the best names in this industry are down 70%, 80%. And even that 8%, which leaves you about a good maybe 100 cryptocurrencies that really have good features that have really good people behind them. They have good investors behind them. You have Anderson Horowitz behind them. I mean, there's also good investors behind FTX. But you're seeing how crazy this industry is. But the survivors that are left, it really reminds me of how terrible it went with, during the .com. Mm-hmm. But there was a lot of good companies that just had crazy valuations that leveraged themselves too much. There were really, really great companies that went out of business. And then look what happened to those companies, right? I'm not talking about now and looking at 20, 25 years later, 23 years later, but even 5, 6, 7 years later, like 2006, 7, 8, just going into the credit crunch, how you saw the leaders really emerge and become the leaders even of today. And that's what you're going to see in crypto. It's not going away. This is something that's real, but it's nice. The FTX thing is, I know it's hurting a lot of people, even people on our newsletter, anyone that's involved in crypto. It's a good thing to wash out all the shit and all the garbage and all these young kids that think they can create a token and just be like, oh, we got a token, and there's no utility features to it. And it's going to, you're going to have that cream rise to the top. And there's going to be a time, probably 2-3 years from now, you're going to be like, I can't believe I bought this at 3 cents, at 4 cents, at 5 cents, and it's like $5, $6, $7. And you're not going to really have that opportunity in the stock market. Even though some of these names are down 70%, they're finally trading at 15 times, 17 times earnings, what they're supposed to trade at when they were trading at 100. Even, whatever says they're trading at something times sales is because they can't use a traditional PE because they're not making earnings and not generating profits. So they'll use sales estimates. Well, there's a great stock. It's trading at 15 times sales compared to the rest of the industry. Now the whole industry has come down, and you've seen all these names come down tremendously. And technology, unfortunately, there's still a lot of companies that are still overvalued. I mean, I don't want to buy. I think NVIDIA is an unbelievable company, but it's still overvalued here. Same with AMD. These are companies you have to be careful with, where just because they're down 60% from their highs, you think they're buys, but there's a re-rating going on. It's no longer a growth market. It's a value market. people want to see cash flow, and that's why you've seen the IBMs hold up well and Intel start holding up well, even though, those are two names that got crushed during the growth phase, and nobody wanted them, but now people want those companies now because they generate cash flow. So that's where we are within crypto. You got to be patient, probably for at least another 6 to 12 months, but a lot of the stuff is washing out. I think most of it's washing out, and then you're going to see institutions, and I think you're going to see our big banks, once this is regulated and SEC gets off their fucking ass for once in their life and comes in. I shouldn't say that because they make, the SEC is a political organization now. But once they get off their ass and regulate this once $2 trillion industry, right? It's a real industry. It's integrated within banks and blockchain and stuff like that. You're going to see some of the big banks really start going all in. And even some of the institutions and money managers are starting to offer Bitcoin in their 401ks, which is a good thing. And that's why you're seeing Bitcoin hold up pretty well, even though you're seeing Coinbase come down. You see Silvergate really come down the other day when they had to cover the $8 billion in withdrawals. But they did have the money to do that in treasuries and stuff like that. And let's see how this plays out. But it's still going to get worse before it gets better, Daniel.
Worse. Frank, we got to do something positive then. We can't talk like that. I'm kidding.
I mean, I said positive where the winners, you're going to see it. I mean, if you're a long-term holder and you're purchasing things like Bitcoin, Ethereum, and some of the others, you're going to get, some of these names should not be down 80%. They shouldn't. I mean, these are good names within the industry, but the rest of them should be bankrupt. Right. And now you're going to see people who launch these tokens. They're going to be more of security tokens. And that's why Coinbase got their license for security tokens. We're a security token. We show our financials and everything. And you get an actual equity stake, just like you would in a stock in our company. That's where it's going to go. That's where it makes sense for a lot of these companies. And hopefully we'll see it go that way. I do think it's going to go that way. I thought it would go that way a lot sooner, but unfortunately you have to wait for the whole industry to get blown up like this before you realize we need more disclosures, we need more regulation. People need to know their money's safe, and that's where we are right now.
Agreed. The SEC isn't going to do anything quickly. That's an aggravating thing, but we'll get through it. Yeah,
which is good because they haven't done anything quickly for 3 years. So hopefully now they're ready because they haven't done anything. They haven't done anything. Oh, well, we're going to regulate. We're going to do this, and it looks bad. I mean, now look. You know what I mean? If you were on the ball, FTX, I mean, it might happen anyway because it's a more international company than U.S.-based company, but come on. If you don't understand this, get people in there to understand. It's just like hackers. I mean, the best hackers are hired by the government because they say, hey, you know what? It's easy to get paid $1 million a year than go in there and steal this stuff and risk going to jail for life. So, these are the best people that know the best. You have great people within crypto that could work for the government to help them out to understand this. You just got to get off your ass. You have to get off your ass now because a lot of people are getting hurt and, it's unfortunate. And, they're asleep at the wheel and they have to get off their ass. I never thought I'd say that about the SEC where, you want more regulation. I don't want it to be overregulated, but you need to know your money's safe. You need to know where the capital is. You need to know that it's not some kind of Ponzi scheme where, FTX is using that capital to fund other investments. I mean, what is this, Party Polka? Remember that site? You think you have all your money on the site and you go, they're taking all the money out and it's when deposits stop, the wheel starts turning. You're like, oh, that money's not really in there because they're keeping it. And when people want their money back, they can't get it. How don't we know that? I mean, why isn't that regulated? It's regulated every place on every brokerage firm here, right? They all do the KYC AML checks immediately here. They do that. They don't even tell you they do it because it's automatic. I mean, if you have a warrant for your arrest and you sign up for a brokerage firm, I can tell you within probably a half an hour to an hour, a cop's going to knock on your door and arrest you. All right, that's all being checked behind the scenes. I mean, this should be done. I just don't understand why it's not done because it's a fascinating industry. There's really unbelievable technology. It is the future. Banks know it. Funds know it. Everybody knows it. So regulate it because this is where the future is going. This is where it's going. But yet you have to regulate because there's so much bullshit. And hopefully we see that regulation coming. But
moving on
before I really get pissed off.
Yeah.
There's some piece of data come out tomorrow that I think is going to be a little bit of a big deal. It's called CPI. What do you think, Daniel?
Well, JP Morgan says it's going to come in continuing the direction of lower. We've passed peak inflation, hopefully, knock on wood. For those of you not watching on YouTube, I'm knocking on the side of my head there. And they think the market will rally 1.5% to 3%, depending on just how low, Frank, the inflation reading comes in. I don't think it's a big stretch to think that it's going to continue downward. We've had energy prices, everything else stabilizing or dropping recently. There is a little bit of lag here, but I think that to be a broken record, I think and the odds are with the stock market rally following that, you ought to use that exactly the way you used a bear market rally last year, which is if you're in growth and tech, I would look to lighten up on those and take advantage of that upward move if we get it, and move cash to the sidelines to reevaluate what opportunities. Because if the market goes up 3%, let's cut that. If the market goes up 1% tomorrow, that will start to get people. Beginning of the year is always slow. All right, nobody's doing anything a whole lot. Everybody's adjusting back into their normal. The next Fed meeting isn't until the end of the month. That means we have 2 full weeks of just financial headlines talking about how inflation is moving lower, how the Fed policies are working, how they're going to stick to their guns. We've had some recent Fed members, both voting and non-voting members, talk about how interest rates need to be above 5% for a very long time. Jamie Dimon of JP Morgan came out and said that he sees the Fed may be raising rates to 6%, Frank. 6.
Is that what he said?
1, 2, 3, 4, 5, 6.
Wow.
And keeping them there. He's also in favor of pausing rate hikes at some point, of course, because common sense tells you you can't raise forever. I want to go to sleep and wake up at the end of February, Frank. I don't want to miss my birthday on the 23rd. Send all your gifts to Daniel at CurzioResearch.com. Because we have the Fed meeting coming up after this inflation. Next week is the Producer Price Index, PPI. This is CPI this week. PPI is next week, followed by the Fed meeting, and then we got more sanctions. I'm not going to go into detail on oil. A good subscriber emailed me. I went back on my word and accidentally talked about energy when I said I wouldn't, Frank, on a podcast last week. There's just sanctions going in there that's why I'm excited about the end of February to really think through the processes. Not that we won't place bets before that, but there's just a lot of things unfolding. And as Tom Petty says, waiting is the hardest part. That's kind of what's going on in Daniel Creech's head. What say you about the CPI tomorrow, Frank?
So CPI is supposed to come out at 6.5%. The JP Morgan thing is interesting because last month they said the same thing and they were right. I believe that, with this report coming out, that's why you see in the market. This is the first time I believe in the last 4 months. Don't quote me on that, but I'm pretty sure I'm right on this, that the market is rising into the CPI number, right? That means it's anticipating a better than expected number. And we're up pretty sharply, right? This is why I say the greatest strategy in the world is buying puts. When you look at this as a whole, the inflation's going to come down, has no place else but to come down, has to come down. We raised rates by the fastest we've ever raised in history, right? So, but in such a short period, it's going to come down. We're going to see it come down. It's going to come down sharply. There's evidence showing even the rentals market's getting crushed now. The housing market's getting crushed. You're seeing demand dry up. So the Fed's going to pause, right? So you want to see prices come down. If prices come down, this is the positive. This is what you want to see. The market is rallying because the CPI is coming down. What that means is that people no longer, and companies can no longer charge those high prices. They have to come down. That means their margins are going to start getting crushed, right? So as the CPI comes down, corporate margins, that means 100% corporate margins are getting crushed, right? That's the bullish case. That's what you're hoping for. If you're buying stocks right now, and I want you to think about that, because if you look and say you take out all the bullshit of the CPI, or the PPI this month or next month, okay? And let's go out for a year, because this is what's going to happen a year from now, okay? The Fed obviously probably by February, hopefully they stop raising rates, right? That's going to be taken as the greatest thing ever, and the market's going to go up. This is why I say buy long-dated puts, because this is a sell-the-rip market. It's going to be like that for at least 24 months. So you're looking a year out, and I see this market where margins are going to continue to shrink. As interest rates stay relatively high, people are getting crushed month over month over month over month. It's not getting better. It's getting worse. You're seeing the money. You point out the liquidity part, right? And the trillions of dollars, right? Remember that stat you were telling me about?
Earlier, yeah.
Okay, so what was it?
$2.3 trillion from the Wall Street Journal in excess savings during the COVID stimulus and all that.
Mm-hmm.
That's down to about $1.2 trillion now. And some Wall Street analysts, Bank of America, et cetera, are thinking that will last until October-ish of this year.
Okay, so that means all the stimulus is out of the market. So last time we didn't have stimulus, the earnings came in at 160, right? So you had all this stimulus, then earnings were projected to go to 240. They're going to probably finish 220 this year. People are projecting still that we're going to grow earnings year over year. Now we're coming down tremendously, like I told you. It's the biggest revision in earnings I think I've ever seen in my life, other than black swan events, right? So, which is the credit crisis and also, recently COVID, where there was a 7% adjustment this quarter going in, 7% earning adjustment. Okay, that's how much earnings go up a year annually if you look back historically, right? If you look back to the 50s, S&P 500. That's the revision right now. So you're going to go into earnings season 2, which starts basically in like a week from now, right? It's already kind of started a little bit. So you're going to see companies say, oh, we report earnings and we beat estimates, right? And everybody's going to, but those estimates have been significantly lowered into this quarter. Now, when we're looking a year out, what you're going to see is that money, like you said, how it's going to be gone by October. Everyone's savings, because you're paying more, inflation is more. Even if you have a fixed rate mortgage, that's fine, right? But there's nobody buying houses right now. There's nobody buying stuff right now. And housing is one of the biggest drivers of the economy. Now you're seeing those savings shrink. And as they shrink, what's going to happen? What are you going to do? What are you going to do when you go spending? You're spending less. You're going to look for alternatives. Oh, you know what? I'm just going to go to Walmart to go shopping. Forget it. The grocery store might be too expensive. I'm just going to you're going to start trading down, and you're seeing it. You're hearing it. Now, retailers as well, with their high margins, like Chipotle, you're seeing Chipotle get nailed. You're seeing Lululemon, companies that were untouchable. We could raise prices forever. Now they're starting to get hit. So any companies that have super high margins, buy puts on. Just by long-dated puts, because now you're not worried about, okay, JP Morgan's right. This comes out. I'd be surprised if it doesn't come much lower to CPI tomorrow, right? So say the market's going to go up 2-3%. I don't really care. What I'm going to do when it goes up 3% is I'm going to bet against the market. That's what we did around a month ago, betting against the NASDAQ. The market went up, and we did that in one of our conservative newsletters, which we only do a Money Flow Trader, but I just want to show people how it works. All right, that put, which was dated, I think 9 months. I forget how long it was, Daniel, but 9 months from now. So it went up 40% in a month. We saw the market rise the past few days. It's still up 20%. I don't care, because it's long dated. I know that the market's still going to get crushed, because you're seeing margins come down. Earnings drive, that's an effect of earnings, right? Higher margins are going to be higher earnings, and earnings are coming down. People are cutting costs. Even if they're meeting their estimates, it's not pure. It's not from the top line where you're seeing strong revenue. It's because you're laying off tons of employees and you're cutting back costs dramatically. They're not looking to spend. Companies aren't spending, businesses aren't spending, people aren't spending, and spending drives 75% of the economy. That's why we're going to fall into a much deeper recession. I don't want to sound like the bearer of bad news. This is a great time to start doing your research and looking for great companies that you could own for the next 2 to 5 years, because while the total addressable markets shrink, Daniel, they're going to shrink, right? Because you're seeing these markets shrink. A lot of companies are going to go out of business, and now you're going to see industry leaders start taking business away from those smaller companies, and then you're going to see the new industry leaders come out of the next bull market. But you have to look now, because you don't see markets like this where the NASDAQ declines 33% in a year. You don't see that. It happens in a month during COVID. It happens in 3, 4, 5 months where you see a big dive during, the credit crisis. Then it was like a false thing where the market went up in December and then it fell, and then boom, we hit the bottom of March 2009, and then we took off. So I don't want to throw too many numbers at you, but what you're going to see is inflation continue to come down. But in reality, guys, that's bad news. It should be factored in that inflation is going to come down. It's going to come down sharply. Okay, if you want to buy stocks based on that, good luck, because you're buying that on negative news for the overall economy, overall market. We're in a no-win situation here created by the Fed. They're removing all liquidity out of the market, and one of the biggest things nobody's talking about is quantitative tightening, where they're shrinking their balance sheet. Okay, forget about rates. They're constantly shrinking their balance sheet right now. So you're taking hundreds of billions of dollars out of the market every quarter, which is going to take place at least for the next 4 to 8 quarters. And as you see that, even if they pause interest rates, it's going to make it where they are not going to lower rates for quite some time. Probably through this year, you're not going to see them lower rates unless we see a really, really massive pullback in the market. But it just sets up that there's more negativity than positivity. And if you're buying puts here, which we show you Money Flow Trader, Ginny is great at doing, you're probably going to see the market go up tomorrow. You saw the market come up. That's the time you want to do it, because now you have long-dated puts, because the next year is going to be one of the most difficult environments that you're going to see. It's just going to be a long slug. It's going to be very, very tough. It's like just dragging through the mud. It's going to be really, really tough. You got to be careful. You got to understand earnings, cash flow, and everything. But the next year, guys, listen, it's contrary to my business needs, because we recommend newsletters. All right. And you're seeing even in Curzio Research Advisory how many stocks we have in there. Sometimes we'll have up to 20, 15. We have a lot less than that. And we'll also play in puts a little bit, right? Just like Money Flow Trader. And we're not going to do that anymore. That's for Money Flow Trader, Virginia. And that's why we discounted that price so much. But when you're looking at the markets, you have to protect yourself, because it's very dangerous. And puts is not just protecting, it's a chance to get greedy. You bet against Wall Street. You bet against companies who don't care about you, don't care about anything, raising prices, doing it. This is your chance to get the upper hand. This is your chance to put up your middle finger to Wall Street and say, hey, I'm betting against you, and I'm going to make money because of all the BS and all the garbage that you've been telling us and how great everything is, like the Disneys and the Fords, and lying through their teeth of how great everything was during supply chain concerns. This is your chance right now, because you're going to see the market go up probably in the next couple of weeks. good CPI number tomorrow. Use it to your advantage. That's the chance that you're going to have to buy puts, long-dated puts, through this year. And I really think you're going to make a killing.
Oh, well said. The old finger up to Wall Street, Frank. That's a T-shirt. That's what we need to do. Curzio Research with a big middle finger to Wall Street.
We do.
That's a marketing idea.
That's what we need. But it's sad because now, usually people don't know how to play the downside, right? The average investor. And that's what we're here for. We don't get paid by companies. We're independent. That's why I could say, hey, you know what? The CS really sucked. You're not going to see it anyplace. No one's going to say it sucked. Nobody. Because they all cover it and they all have insider access and, they know a lot of the companies there. And it's this whole big, circle within, technology. We all like each other and liberal stuff like that in San Francisco stuff, right? So they're all together and they don't talk bad about each other. And I don't care. My interest is for you. Right, that's it. That's all I care about. Why? Because that's how we sell newsletters. That's is by helping the individuals make money. If you don't make money, you cancel your service. It's that simple. That's it. I'm not getting paid by somebody else and saying, "Oh, I'm going to recommend." None of that shit. So when I see the market, there's times to really be aggressive, which you had in the last 12 years, and we benefited tremendously through our newsletters and having that growth model. It's a value market. It's going to be like that. It's changing, and a lot of people, especially analysts, have been around for 10, 12 years. The only market, Daniel, that they've been in is when we've had zero rates and the Fed has been pumping liquidity into this market like crazy. The Fed is not there for us anymore. They're not going to stop anything. Okay, they can't. Otherwise, it's going to create more and more inflation. That's why it's very dangerous right now because as you're seeing these companies, you're seeing it in retail. Bed Bath & Beyond, you see them cut stores. I mean, I don't know how retail is going to make money.
Yeah. Great
during the holiday season. Who the hell is at retail sales right now buying stuff? Who? I mean, Best Buy and stuff like good luck, man. They're going to be selling TVs really at a steep discount going into Super Bowl, but it's I don't see the demand there, and demand is falling off a cliff. You need to realize that. So when you see the positive CPI, what positive means it's coming down. That's actually a negative for the economy. It shows that we're falling into a recession, and it's just a double-edged sword. There's no good news here. You just got to wait it out. And instead of just sitting on your hands and being like, holy shit, my stocks keep coming down, here's a way to make a killing. I'm not talking about making 30, 40%. I'm talking about Ginny closing trades on average for triple-digit gains in months. Okay, that's what you need to be doing in this market because you're going to be making an absolute killing. And more importantly, you're going to have a pile of cash at the bottom of this market, which is exactly how the greatest professionals, the greatest companies in the world, that's how they play this market. You want to be have tons of cash, have a great balance sheet, because that's going to allow you to buy assets at 10 cents on the dollar. And that's how you create generational wealth. But not just your family, but your kids' kids and their kids' kids. And it only happens when you have markets like this. So prepare. We're doing that right now. We're preparing. There is going to be good news. It's not like, holy shit, the world's going to end. There's a couple of stocks that I think will do good over this time, but you have to be very, very careful.
Before the world ends, buy Northrop Grumman and Lockheed Martin. That way you'll profit as the world ends with war and all that kind of stuff.
Yeah. So if you have World War III and you have puts, the only thing is, you're going to be you're going to make a fortune. You're not going to be able to spend it, right?
That's all right.
Yeah.
You still go out on top.
It's like all the people that say,
hey, if you're going to die, would you rather know you were right or wrong? I don't know the answer to that, but I'm assuming we're all human, so we'd rather be right than wrong.
It's like the guys that say that the dollar's going to lose its reserve currency, and they're betting for it. I was like, if that happens, you're gonna have people like shooting you in your house and total chaos, anarchy everywhere. I'm like, I don't think anyone's
know about that. Yeah.
Since the 70s, right? So yeah. I mean, really, if your money's no good anymore and all the banks shut down,
that's one of those bets that's easy to make, though. Yeah, I agree with that too, because there's no currency in the history of economic transactions or history, for lack of a better word, that one has lasted. So there's no reason to believe this one will, and you don't have the timeline. You're not going to be around if it does. So,
but how many of those?
That's the thing you can say. That's one of those easy. Oh yeah, it'll happen at some point.
Yeah, but
just same people with oil. Oh, we're going to run out of oil. Yeah, okay, maybe in 10,000 years, but nobody's going to be right and know about it.
I know. Just drill deeper and deeper and deeper. It is funny, but a lot of those currencies just
won't get
defend
into that.
Just to defend that, we won't get into it, but yeah, to defend that, most of those currencies were under different leadership, not democracies. Not, you could argue we're not really in a democracy or whatever, but you could see why it falls so many times. Because now where we're going right now in the spending is it just keeps happening.
Yeah, even
they don't
with that.
stop
I mean,
they're not stopping the spending.
Military and energy is all that matters for the reserve currency, and to make it dumbed down to my level. And again, but I think to think that it would never change, I think is silly, because you're going against every record of economic history that we have.
Yeah.
But again, to say that it's changing tomorrow or next year, or the guys since the 70s have been saying that every year, of course, that's just as equally as silly. That's just fun.
Yeah. No, it is. That's a whole discussion for another day. Yep. We can keep going and going and going on that. It's just, for now, I wouldn't really worry about dollar losing its reserve currency status.
Don't worry about it. Buy gold, buy Bitcoin, buy Lockheed Martin.
Let's talk about gold, because you heard me shit on gold for such a long time, and now we're bullish on gold. I'm very bullish on gold. I'm very bullish on copper. It's just the trends are in your favor right now. Not recommending them as a safe haven. Recommend it as something that even the large gold companies are like, if you look at their fundamentals, there's things that killed them last year is because of the much higher cost inflation, oil. A lot of these guys are modeling for oil at $100, $110, like Newmont Mining and Kinross. I mean, oil is 70s. So you're seeing inflationary pressures come down tremendously at the same time while gold prices are rising, 7-8 month high now, right? So that is going to be an explosion in margins, which I'm not seeing in any other business right now other than gold. We've seen and copper, right? So in mining. So these aren't plays like, oh, I'm going to buy them as a safe haven. No, these are like the new technology. If you want growth at a reasonable price, gold, copper, start looking for those names now because it's rare that you see prices going up and their costs going down tremendously as inflation prices ease. That's going to result in a boom to margins. One of the few companies I know where margins are going to go higher, much, much higher, where the rest of the industries, when I'm covering all the industries, you're seeing margins going lower. Gold, mining, copper. Again, these guys are trading 6, 7, 8 months highs. These look like great, great plays. Again, not on the world's going to end type thing and holy shit, the market's going to come down as a safe haven. No, I'm talking about as really good, just great companies that are growing their earnings. You're going to see a boom in these names because they're very, very depressed right now because those inflationary pressures, they're easing tremendously. Those costs are easing tremendously. And now's the time to actually go in because they're very, very, very cheap. So, Daniel.
Buy gold, like Austin Powers Gold member. Go watch that movie.
Gold.
If I had a soundboard, I would play that. But I don't.
Man, I wish. I wish you made like 100 of those movies. It was so great. Anyway, Dan, thanks so much for joining. It's great to be back, and thanks for holding down the fort, man. I appreciate it.
Glad you're back. Cheers, everybody.
All right, guys. That's it for me. Questions, comments, feel free to email frankcurzioresearch.com. Dan, what's your email?
Daniel@curzioresearch.com.
Which I always know, but I love that you say it. So, okay, guys, have a great, great day, and I'll practice tomorrow. Take care.